Tuesday, April 4th, market analysis. Stan Ehrlich, good morning. We have some major reversals in progress now. You'll notice on the S&P 500 5-minute chart on the left that my colors have turned, just a moment, yellow because of being overbought, and they have also turned red at approximately 8:20 this morning California time, because we just created a bearish engulfing ER official red sell signal. We haven't seen one of these, and it didn't work quite as I expected since February 9th. And then you have to go back to a pseudo red sell signal on November 1st, which worked great for 2 days. And we'll go back to an extremely profound one, which was on April 5th of 22, a year ago, almost exactly. And that was unbelievably huge move down over a couple of months. Now, wait a minute. I don't expect to see a couple of months down on this sell signal. This sell signal that is in progress as we speak probably is going to cause a break down to close some gaps down to about 396, a gap about 4 or 5 days ago. So I'm not turning bearish. I'm turning correctionary or a dip in a bull trend. The dip down to 396, 397 area should stop there in that ballpark and turn back up to make new highs probably before the end of April. But this is it. I got my sell signal. The only thing that can change the signal, if it happens today, is it for it to close higher than yesterday's close. That negates the signal completely, and I'm back to overbought only. Still a warning that the market is about to turn down, just not an official ER sell signal. It'll turn back to a yellow color instead of being red the way it is right now. So let's take a look at the 1-minute chart on the spider, and I am going to shift. There we go. And here we are this morning so far. Opened slightly higher, took a little dip, made a new high again for this last several days, week or two. And then, because of the overbought condition, I would say, and we did have some economic news that came out that was apparently a little friendly, but not that much, and was apparently kind of built into the market in advance. Remember, markets move on anticipation and reverse on realization. One of my little sayings that I came up with a long time ago. So we have red on the 1-minute bars at the moment that the market has turned into a bearish engulfing ER official sell signal, which it will stay red unless it gets back up above yesterday's close, which does not look particularly likely. Although I gotta say, we're down 2.5, and that's not a heck of a lot. I'd love to see this thing close down 3, 4, 5 points on the day, and that's not a heck of a lot. That's a pretty decent down day. But there's a reason for me saying that. Now the DIA, and you can see on the daily chart here on the S&P before I go to the DIA, sorry about that, and the spider did come up, and I commented about this yesterday, to the beginning of some resistance. It was equal to, right in the ballpark of the two highs that we had back on December 1st, and which was 400 exactly, .00, and the high that we had on December 13th was 400.49, only half a point higher. So that ended up being a double top that worked great down to a trading range bottom, and then up to the highs we saw in an overbought condition February 2nd. And now 2 months later, we're again in an overbought condition, and we have an official red sell signal so far on the exact high day, which is exactly why this trading system was built. ER signals on the DIA. We also have overbought conditions, stop that, on overbought conditions, and a red bearish engulfing because we have all of the conditions met. And we were in a resistance area, and of course we were overbought. Plus we had a gap up yesterday and the day before yesterday. And I believe there's also a very small little gap that goes maybe down here at 322. I think that's true, but it's awful small. So at the most on the downside, 322.50, but probably somewhere in the area of 328 or a little bit lower, which is below the lows of only a couple of days ago. And it closes the two gaps we just had in the last previous 2 days. One of them's already closed this morning when we came down to the low of the day, which is about the high of the day before yesterday, which would be Friday. Next chart is the QQQ, and it has been the strongest, held up the best, and not gone down as much in the last few months, essentially since October 13th's whopper of a bullish ER buy signal on the bottom of the bear market of 2022 and the beginning day of the bull market of 2023, which I do believe we're in. This move down now has to hold at appropriate levels in the next several days to maybe a week or two at the most, and then start to turn up and make new highs. That would definitely add to the intermediate longer-term bullish expectations that fundamentalists, I kind of nickname fundamentalists. I understand fundamentals, sort of, but I don't use it at all for my analysis. This is overbought 3 days in a row, made a higher high, and has not yet dropped below yesterday's low. If it does, it will turn red. I will have sell signals in all three of my major indexes. I said so yesterday. Watch out. The market's getting close. I even mentioned it slightly on Friday, but yesterday, definitely. So this is coming true so far. Of course, everything you ever say is also always so far. Let's go look at futures. We got some new signals there. Okay, the E-mini is a futures contract as well as a stock index. And of course, it has an outside down day bearish ER sell signal, and it is red. Now, people, remember, once you get the red sell signals, you have an opportunity to sell short on a retracement into the range of the red day, which is not over yet. We could make lower lows, and we're not far from it, which would expand the range and change the location of these little red dots on a real-time basis. So I'm not sure exactly what price yet. By the time when the market closes, then I'll know exactly. If we can get up to that price in the next few days, and that goes for the Spider, the DIA, and the E-mini, and the micro E-mini, and maybe the NASDAQ if we can get a bearish reversal out of it. So a whole bunch is happening here. And the next few days, we could add to the short positions or put on a brand new ER3 short. Remember, ER1's already short, small profit momentarily. It goes short the day of the red signal, which is today. So that was the E-mini. Now the next futures contract, natural gas, continuing to drop into new low ground yesterday and holding steady down just a hair maybe today. Nothing new. We're looking for lower levels, significantly lower levels. We had a buy signal 2 days ago in soybean meal, and I believe soybean oil. Soybean meal has come down very close to stopping us out. And if it does drop below the yellow dots, which is a little bit below today's low, we will officially be out of the trade. ER1 almost certainly is out already, and ER3 got into the trade yesterday and probably is not out of the trade and is at risk at the moment and will not lose too much. Looks like a few dollars if it gets stopped out. Next chart. Soybean oil did have a bullish engulfing 2 days ago on Friday, excuse me, and did come down into the range of Friday and has gone long tiny bit above where we are right now. So if you were so inclined, and obviously other reasons, funds, interest, blah, blah, buy it. 55.13 momentarily. Your risk is down to approximately 53.92. So it is not huge. You might be getting a little lower prices in the next, few minutes to a couple of hours. But what I really want now is for it to just plain old every day start to rally. Next, and that would be an ER3 new long position, which we put on today. Wheat did have a buy signal a week ago. Went up a little, going sideways at the moment, still looking for higher prices. But we did bump against the resistance area on the rally last week, and it is a bear trend. So we really have to prove itself getting up into that resistance area above the red line in order to make new significant headway. Maybe up to the top of the trading range would be around 805, 804. Next chart. Cattle. We had a great buy signal. I can't believe this one. This is just out of the textbook. A great buy signal almost at the low of the break on March 24th. Bullish engulfing green buy signal. It went up a chunk the next day, a little bit sideways to higher the next day, higher the next day, higher the next day, higher the next day. And you know what? Yesterday, we had a bearish ER sell signal, period. That ends the bull move. It lasted 6 days or so, 5-6 days, and was a great trade. Nice big profit. Now, we have opened this morning equal to or higher than the new short price level from yesterday's new bearish signal. So we're short on the opening today, about 161, 40. And this is live cattle, currently trading 60.75, 160.75. And all we need to do is drop a little bit more below today's low. That would be getting below yesterday's low and probably closing below yesterday's low, which would be a great kickstart to a new short trade. Our previous buy signal was just dead perfect. Next chart. Platinum and gold and silver all had new long ER green buy signals at the bottom of their moves. Today, new high and a new high close likely for platinum. We are long from the date of February 27th, the bottom of the break. I don't have to say any more. We are also, I will. We are long from March 10th on silver, the bottom of the break. And today is a new high and a new high close probably, which kills yesterday's new sell signal, by the way. I should mention that if we are in a trade, which we were and still are, a new sell signal does not necessarily get us out of a long and make us go short. We need to get stopped out of the previous trade and be flat in order to get into any new signal. And so we are still long on silver, and yesterday's signal is now negated. Otherwise, it would be a warning that we're probably going to get stopped out soon of silver, but that did not happen in this case. Next chart, we are long gold from the first and lowest low of a double bottom, and that was on February 28th. Today, guess what? New high, likely new high close, no interference in the middle. We just got a little overbought a couple of times and had a correction, not bad, not that much. And now, boom, new high ground. Next chart, cocoa, don't care. Got a little overbought, got to work that out. This is 10-year notes, important. Remember that if we get above that little blue line, which is around 1617 almost, not quite, and we're at 1603 right now, 1607. So it doesn't have but a point higher to go in order to be breaking out of what could be a major long-term bottom formation. I love this breakout potential, and it should help the stock market turn back up again. Although at the moment, we're going down, which is what I want because I got a sell signal today. But it's, well, fine. Let's look at, and that was 10-year notes. I'm bullish, expecting major breakouts relatively soon. That might be another month or two, but as of today, you realize that if it closed right here, right now, that would be new high close. Since the only other high close above this level since January 18th And that was the highest one since, wow, we're going back to September, before the market bottomed out, when it was in a bear trend. So any close today right here is pretty interesting, and we're not overbought. Next chart. Bonds, pretty much the same commentary. Today's closing price would be equal to or maybe higher than any other closing price. So all we have to do is punch through the red zone and you have an official upside breakout, which could still happen. We'll see. Next chart. OJ, overbought, watch out, don't go long here, look for sell signals. High grade copper, sideways. Sugar, overbought, watch out, look for sell signals, don't chase after the sugar market at the moment, look for a correction, probably back down to 2130. Corn, overbought, is starting a little retracement, no surprise. Crude oil, gapped up the last couple of days and is now overbought with a gap below the market, and that is well, I shouldn't say sure, a highly likely sign that we're about to come down immediately to probably the high of Friday, and maybe a teeny bit lower than that, because the real support is a little bit lower than where the gap is. 71, I would have to say. Yeah, 71 to 72 is a very good possibility, but very likely a 75.80 to close the gap, which is the high again of Friday. Next chart. Hogs, Miss Piggy, was oversold, bounced a little, now in neutral ground, not oversold anymore, bear trend, look for new lows. Next. Heating oil could have a major bearish breakout, and I don't think it will take too much longer. Maybe it's going to happen this month. That it would be closing below the lower of the two green lines, especially below the 2.17-ish green line. Of course, this is going to be broken first, and a very good indication that you're probably going to break the one underneath it. So I'm bearish on heating oil. We just don't have the breakout to the downside yet. What we do have is a new short sell signal on the top of the bull move, and that was January 24th. And one very close to the top on November 8th, and one that was on the top of the rally on October 18th, and a buy signal at the bottom at support on September 19th, and a new sell signal. All of these worked really well on the average. June 17 of 22, a little less than a year ago, on the top of a whopping bull market. Some great signals in heating oil lately. And soybeans, bull signal Friday, rally, new highs Monday, pulling back a little bit today. We still have today and tomorrow to get down to that green dot at 14.95 and 3/8. That's where I would consider being a buyer. My fail-safe sell stop so far is 14.67 and 6/8, 3/4. So there's your risk, entry and risks, and we'll see what happens to the signal. Remember, ER1 is already long, and it got long way back at Thursday's high, 1484. Call it 1484. Right now at 1510, last trade. Next, E-mini, we started with brand new sell signal today. Let's go take a peek real quick at the fine-tuned stuff before I finish this recording. And the daily and the Qs is where I left off. So I'm going to go back to the 1 minute on the S&P, and it is doing fine. Broke down below some support, hit oversold conditions, came back up to a little resistance, stopped, classic, went back down, made new lows, got oversold again, and pretty darn deep oversold conditions at 11. Remember, my RSI is the subgraph, and it's a custom version. It is not Wells Wilder's original RSI. We have a variety of things that we do differently. I learned RSI directly from Wells himself in the 70s and 80s. Looking good. You have a great day. My day's good so far.